Hello and welcome. Today we're digging into a really fascinating take on the current bull market and a strategy for navigating it that, well, it's pretty radical. What if the secret to making truly life-changing gains wasn't about trading more, but about having the guts to do absolutely nothing? Let's dive in.
So first, let's just set the stage here. We are not talking about your average everyday market rally. The analysis we're looking at says the current precious metals environment is something totally different. It's a rally so powerful that the normal rules, they just don't seem to apply.
And this quote right here, it just nails it. The momentum is so intense, it's basically steamrolling all the traditional sell signals. All the little signs that would normally tell a trader, hey, time for a pullback. They're just having zero effect. The market just keeps plowing higher. So how are the old rules getting tossed out the window? Well, let's look at the signals. You've got extreme bullish sentiment. Normally, that's a huge red flag for a top, right? But in this market, the price is just running right over it. What about an overbought RSI? The relative strength index. The thinking here is that in this phase, it doesn't mean a drop is coming. It just means the momentum is off the chart strong. Everyone and their brother is expecting a pullback, but the rally just keeps going. Now, this kind of crazy environment leads us straight into the heart of the problem. It's a psychological trap, a really dangerous behavior that can sabotage investors right when the biggest opportunities are on the table. So just think about it for a second. When a market is just ripping higher and you're seeing huge profits on paper, what's the single biggest danger to your success? Is it a sudden crash? Is it picking the wrong stock? What is it? Turns out the answer is you. More specifically, it's that temptation to lock in those gains, to just get out too early. It's this huge psychological battle of watching your account swell and constantly fighting that little voice in your head telling you to sell before it all disappears. And that urge to sell gets cranked up to 11 by someone the analyst calls the top caller. These are usually really experienced traders, and they are constantly, and I mean constantly, trying to predict the exact peak of the rally. They sound super confident, but their attempts to time the market can be really damaging, especially to folks with less experience.
And the analyst doesn't mince words here because the impact is just so severe. When newer investors see these so-called experts calling for a top, they get spooked and they sell their positions. They get shaken right out of the market, a lot of times just before the most explosive part of the entire move.
And that's the real kicker. Here's the cost of getting shaken out. The vast majority of a rally's entire gains can happen in just 5 to 10 huge up days. That's it. If you're trying to be clever and time the market, and you miss even a couple of those days, you absolutely gut your overall returns. The price of trying to outsmart the market is missing the whole point of the move. Okay, so that's the problem, but what's the solution? Well, this is where it gets interesting, because the answer is so simple it sounds radical. It's the power of just sitting still. And there it is. That's the core idea of this whole analysis. In this kind of parabolic runaway market, the path to huge gains isn't about frantic trading or trying to call the top. It's about having the conviction to just hold on and let the trend do all the heavy lifting for you. But let's be really clear here. This is not about being lazy. Doing nothing is actually presented as an active strategy. It takes an incredible amount of discipline to ignore the daily noise, to resist that urge to sell when the experts are screaming top, and to fight that overtrading mania that gets a hold of so many people.
So this sets up a really fascinating showdown between two completely different types of investors, the hyperactive, experienced trader versus the disciplined, patient newcomer.
So on one side, you have the active trader, the expert. They're trying to call tops, they're trading in and out, trying to dodge every little pullback. And in doing that, they risk missing those 5 to 10 critical days that make or break the entire rally. But on the other side, you have the patient investor. They might be a total novice, but they just hold their core position. They ride out the down days. And by doing that, they capture the full parabolic move. It's wild, but in this kind of market, the expert's experience actually becomes a disadvantage, and the novice's patience becomes their superpower. I mean, that is an incredibly bold statement right there. The argument is so strong that the patient investor is practically guaranteed to massively, and I mean massively, outperform the hyperactive trader. It won't even be close. And it's all from just having the discipline to sit still. Okay, but sitting still doesn't mean you just hold on forever and hope for the best. That's not a strategy, that's just reckless. Discipline has to apply to selling too. So the analysis also lays out a really structured plan for when and how you eventually take those profits. All right, let's walk through this 4-step plan. Step 1. You wait for a clear signal that a major wave of the rally, what traders call an intermediate cycle, has probably peaked. You're not guessing, you're waiting for the markets tell you. Step 2. You sell the trading position. It doesn't matter what the profit is, you follow the signal. Step 3, and this is key, you secure those gains. The recommendation is to convert those profits into a core holding, like physical metal. And finally, step 4, you reset. You put a much smaller percentage back into your trading account to start the whole process over again.
So what's the whole point of this system? It's all about controlling greed and protecting what you've earned. See, after a huge run-up, markets can get really choppy and volatile, and it's so easy to give back a huge chunk of your profits in those periods. This disciplined exit strategy is designed to get you out and lock in those gains before that happens.
So let's bring this all home. What's the single most important lesson from this entire analysis? What's the big takeaway?
And there you have it. In a market that's moving this fast and this powerfully, trying to be the smartest person in the room can be the quickest way to lose. Your true edge doesn't come from years of trading or some magic ability to time the market. It comes from the simple but incredibly powerful discipline to just stick to your play. And this last quote really drives home what's at stake here. This isn't just about making a few extra bucks. For the people who can master their emotions, who can resist that urge to overtrade, the rewards can be absolutely life-changing. And that leaves us with one final thought to chew on. In a world that is always screaming at us to do something, to act now, to make a move, maybe, just maybe, the most powerful and profitable move you can make is to have the courage to do nothing at all.